I have a question.
Yeah, sure. Please.
The last session, you have mentioned two vendor or customer bank, okay? So
Mhm.
my question is the bank of the customer or a vendor, I create it as counterparty, or I only create the bank as a counterparty when I take loan or investment or make an investment in this bank? I like to know when I create vendor, I add the bank details in the master data of the vendor or a customer. So I don't need to create the bank of a customer or a vendor as a counterparty, right?
Right. That's correct. So basically, it depends on the role that you are, the role of the business partner is something that you should consider in such cases. So let's say if you just talk about treasury, right? In treasury, there is really no requirement for having vendor or customer. We can only create a counterparty, and that is sufficient for us to create any payment request into the payment run. Okay. Now, when let's say if you have a bank and if you just want to do some investment or you want to take loan from that bank, in such case you need to create a counterparty. That is very important because only in that case you can create a deal with that particular business partner.
Okay.
But what I was saying is that I think someone had a question that can I extend the same business partner as a vendor or customer? Yes, you can. You can actually extend that same business partner as a vendor or customer. And it also depends on your design. Let's say if you want to just create a payment request, in that case, a counterparty is good enough. But if you also want to create an open item, let's say you want to track it under, a particular payable. Let's say let's say you have taken a loan from a bank, and once you take the loan, you also need to kind of have a liability in your account. Okay. So you basically receive money from the bank and you want to track that under your liability account. So in such cases, depending on the way you want to track your liability or asset, you can create the business partner in the right role. So counterparty is sufficient in case you just want to do a payment request as part of the treasury process. Often what you've seen in case you want to track that as a liability or track that as an asset, depending on the way you want to treat that in your financial accounting, you can extend it to different roles. In my experience, I've seen that you extend a treasury business partner as a counterparty, as a customer also. In such case, you track that as a liability, you track that as an asset, depending on the loan or investment, and then you can easily do any open-ended payment, etc. Because what may happen in some cases, you want to track it as an open item. So let's say you have to pay money on a quarterly basis to the bank, and you want to track that as an open item, right? So so in such case, let's say you are doing some repayment to the bank on a annual basis. You want to track that as a liability. So in such cases, you can accordingly treat that in different roles. Okay. So it is not necessary from treasury point of view, but depending on your business requirement and on the design, it is possible to extend in different roles.
Okay.
We have covered some basics of hedging and exposure, so that will be also covering in the subsequent sessions. Okay. So we'll probably start with, so we cover some product types that we have for different types of money market, like debt, working capital, non-fund based trade finance, investments. We have covered what is a product type and those basic things. Okay. So we'll start with some few points first, and then we can actually go back to the system, and then we'll do some practical. Okay. So let's just start with some cash flow types. So basically, these cash flow types are nothing but if you have created a deal, in that deal, you can also have certain additional flow types. So what is a flow type? A flow type is nothing but this is how you can actually post a transaction into your system. It can be, let's say, investment, a loan, increase of investment, or decrease of investment. So we spoke about product type, transaction type, and then also under that we have the flow type. Okay. So now certain flow types are covered by default. That means these are part of the configuration that will get defaulted from the configuration when you create the deal. But certain flow types actually you can add because those flow types are not part of your standard, and those flow types you want to add as an additional thing, which can be something like a bank charge or a mortgage or guarantee fees, stamp duty. So there are certain things which are like trade finance charges, right? So these are also additional flow types that you can configure, and this will again start coming into the other flow types for you in your deal. Okay. And once you configure them, then automatically when you do the accounting entry, then these flow types actually will come and it will get posted when you do the accounting, because those flow types are not part of the standard. That's why you have to configure those flow types so that you can actually post them into from the treasury module. Otherwise, you have to use the finance module to post certain things which you want to avoid. Is it clear?
Sorry, can the definition of the flow type?
Okay. So let me.
I mean the meaning of the flow type again.
Yeah, yeah. Okay. So I hope product type is clear for everyone, and even the transaction type is clear, right? These two are clear for everyone, correct?
What was the transaction type? I'm just missing that. I remember the product type you explained. What was the transaction type?
So basically, when you're creating any deal with a bank, let's say you want to create a deal with a bank, and you are telling them, "Hey, I want to create a certain type of investment." Now, under that investment, there can be different types of investment. Like it can be like it can be a borrowing, it can be really a investment, short-term investment, long-term. It's kind of a categorization of the product type under the transaction type. So, if I just show you, let us also just quickly read to the definition. So, a transaction type, in this section, you define the transaction types and assess the necessary flows and condition type for the financial transaction or product. The financial transaction type specifies what you can do with the product types you have defined. For example, under a time deposit, it can be a borrowing or an investment, a purchase or sales, right? So let's maybe if we just go to H_, create. So this is company code. So let's just take a forward as an example. Okay. Okay. Let's take 51 days as an example. So now under 51 day, so this is a fixed term. Now, whether it's a fixed term investment, whether it's a fixed term investment with premium, or whether it's a borrowing or borrowing with premium. So what kind of
Okay, I get it.
you got it, right? Yeah. So now this is the transaction type. And under transaction type, we have the flow types. So what is flow type? A flow type is basically in the flow type, you define what are the necessary condition for your transactions. Flow describes the payment flow arising from financial transaction. They are classified through flow types. The sum of all transaction flow forms the basis for generation of the cash flow and describes the possible changes to the updated payment flows. They also form the basis for operating in FI and cash management and for analysis in the market risk management. So, like examples of flow types can be interest, repayments, principal increase, commission, and other kind of charge. It can be a bank charge, can be increase in the investment, decrease in the investment. So, like if I just simply go inside this deal, let's say I choose 100, I'll choose this is what I click here. You will see automatically a flow type has been assigned. Principal increase. Why? Because I've taken investment. Because I've taken investment as my transaction type and I've taken principal as fixed term deposit, automatically flow type 1100 is assigned to this amount. Now, if you go and see here, you will see there are two types of flow types assigned to this field, which is principal increase, principal decrease. So there can be some cases in that I'll also let you know in the future. I'll just give an example. So let's check. So let's say here I'm giving details. The system is assuming that there's a flow type of 1100. That means principal increase. Okay. And this flow type is also linked to update. We'll discuss. This is more of a configuration. So this flow type, the system is assuming I'm giving 100,000 here. That means I'm investing $100,000 on 22nd of November 2022 in this bank. But now let's say after 2 years, I have also taken some money out of the bank because I had some requirement. So now let's say I want to give 1100, okay, 1100 principal decrease, or let's say $50,000 on let's say 31st December 2023. So now if I click on copy here, you will see in the cash flow, there has been a principal increase of 100,000. That means you have invested this money. Okay, you've invested this money and it's an outflow for you. Why is it outflow for you? Because you have invested the money. That means this money is going out of your company and going to the bank. So it's an outflow from your company's point of view. Okay.
Sorry to interrupt. This is an investment or borrowing? Product type is borrowing.
Product type, it's term deposit or borrowing. This is how it has been defined. And the transaction type is investment.
Okay, got it. Okay. Sorry. Yeah. Got it.
Transaction type is defining the basic nature of 51. Am I correct?
Transaction type, yeah. There are two types of transaction types here, mainly. One is investment, one is borrowing. Since I've taken investment, that is why the flow type 11 will just come as a default. Now, if I take as borrowing, this will actually become the reverse one. So let's say I don't want to save this. Let's say I go to, let's say choose borrowing. Now, if I click here, it is not correctly configured.
In the case of borrowing or investment in principal increase?
No. I think for actually for borrowing, it should be decreased. I think it is not correctly configured. But ideally, what we expect is that the flow type which should automatically get adjusted based on the transaction type. So the transaction type is 200. In such case, the flow type should be principal decrease. And if the transaction type is 100, it should principal decrease. So that based on the transaction type only, user can actually get the right accounting entry. Okay, let's go back to our example. Yeah, so here, if you see, here you will see there's only a principal increase of 100,000. And it's an outflow because this money is going out of our bank and out of our system and going to the bank. Now, if you actually come here and let's say, as I was mentioning, let's say if you want to decrease some amount, let's say on 31st of December 2023, you have actually taken some money out of your bank. So in such case, you will see the principal has increased by 100,000. It's a cash outflow for you because this money is going out, and there's an inflow of 50,000 because you have taken the money inside your system from the bank. You're taking this money back to the company, and automatically the nominal interest actually will get adjusted here. Okay. So between 22nd of November 2022 to 31st of December, it is giving 5% interest on the entire 100%. Okay. But for the next one, it is only going to give the interest on the remaining 50,000 from 31st of December till 1st of April 2027. The base amount has actually got decreased because I also decreased the principal amount. Isn't clear? So basically, if you notice here, the flow types are different. This is the flow type for principal increase. This is a flow type for principal decrease. This is a flow type for nominal interest. This is a flow type for principal repayment. So the flow types are different for different types of, I would say, different types of transactions that are happening within the same deal. Okay. And this is how the accounting entry also will vary based on the flow type. So is the flow type clear?
Flow type control, cash flow, and accounting entries, right?
Correct.
Okay, thank you.
Okay, so we'll go back. Let's look at the flow types for a second. Yeah, this is a problem. That is why you're actually getting it, because this is wrong actually. Let us change it. This is not correct.
No, it is perfectly correct. Why you are saying it is not correct? Because when you are borrowing, basically you are taking a loan from the bank. It is increasing the principal, isn't it? You are getting the money in.
No. So here, if you do the principal increase, actually,
yes,
that is correct.
It is perfectly fine, I believe, because 51A you are saying it's a fixed term deposit, and 200 is a borrowing. Means you are borrowing from the bank. When you are borrowing from the bank, is it going to increase your principal inbound?
So principal increase actually is linked to outbound, because when your principal is going to increase, it's an outbound cash flow from the company's point of view.
Okay. I'm not sure. Can you please try to create the product, like in a minute and see how the accounting is showing? Maybe we can quickly,
Okay. That is in fact just right side. I think I may not have the proper access.
So conceptually, according to you, what should be the flow type here?
The flow type should be a principal decrease in case of borrowing and principal increase in case of investment, which is 1110. Yeah, I mean, instead of creating a complete new product, what I'll do, I'll try to modify the same product and we'll change the flow type for this transaction type, and then we'll try to post it. Okay. But I'm just trying to get access for this. I think somehow my access is not enabled. So that is why I'm not able to change it. So we'll come back to this point again. But I hope the flow type is clear with all of you, right? What is a flow type?
Yes, I believe it is for me.
Okay. Okay. So now, depending on the type of instrument that we are creating, there can be different types of additional steps. So here we're talking again about the equity investment. Equity investment can be different types like subsidiary, joint venture, associates, etc. So here, in case of such equity investment, we actually, create the first step is to create a security account, called creating a demat account. Okay, there we actually create all the investment class, etc. And then the next step is to create the security class ID. The security class ID also will have certain conditions for the security. For example, when you're going to create a security class, it will actually have certain conditions associated with it. So you need to give all those conditions. So we'll see in details in system also. So then we have to record all the trade with the details. We have to post the accounting flows. There can be dividend payment, there can be actual and actual payment. There can be detailed transaction flow of the trades, and there will be period and valuation. And then also you can get a detailed report with the transaction flows. So all these things can be controlled. Okay. So let us talk a little bit about cash management. Generally, anyone has any idea about cash management? What is the necessity of cash analyzer or cash position in a company?
So yeah, so basically cash management will be used to position your cash. So like where your inflows and outflows, and to identify how much of the cash is been available and within those accounts, and how much the cash need to be go out from that account. So it will end of the day actually you'll get to know the report that how much actually is the liquidity and how much has been gone from the account, so that you can able to track your inflows or outflows, so that based on that cash manager can able to take the decisions for the whether you can able to make some investments or you need some borrowings.
Correct. So exactly. So we used to have transactions like FF7A, FF7B. Now we are entering the same into an app called Cash Flow Manager. So basically, cash management is nothing but it's kind of a report which gives the cash position of the company. And in very simple layman terms, if you just forget about all the vendor, customer, payable, order, everything, just the basic thing is that if you just take your bank's position, like for example, if a company has 5 bank accounts, and if I just take the overall cash position for the 5 bank accounts, then in simplistic term, I'll get how much cash I have, how much liquid I'll be. That is the very simplistic term. Now, there can be certain conditions to it if you want to explore it in a more advanced way. So in advanced way, we can think of it like, for example, I have some customer invoices and I'm expecting some payment to come in next 2 weeks. Okay. And I have some vendor payable, which also have to make payment in next 1 month. So if I add those conditions, which can be tracked to, let's say, my incoming bank account or the outgoing bank account, etc. In such case, what will be my cash forecast for next 1 or 2 weeks or next 3 weeks? So cash management deals with short-term cash forecast, which can help you stay liquid, which can help you meet your short-term obligations. Okay. And there can be some manual planning, which the system may not know. For example, I'm expecting to buy a land next week, but that is just in my mind. That is not something that I have actually put down in the system as a transaction, because that is going to happen in the future after 1 or 2 weeks. In such case, we can create manual memo records. Okay. And then we review the cash position again. And then we review the liquidity status. And finally, the CFO makes a decision to either invest surplus money that is not required in next 1-2 weeks, or they can also decide to borrow in case they crunch of cash. So that is the concept of basic cash management. Okay. Any queries? Okay. So we spoke a little bit about the market integration. So we spoke about Bloomberg, we spoke about Thomson Reuters, FX, etc. And we also spoke about FX rates and interest rates. So FX rates, we also So FX rates is also checked, like Bloomberg rates. M rates are nothing but market rates. R rates are nothing but regulatory rate, right? So I spoke about usage of M rates versus regulatory rates. Does anyone remember when we use M rates and when we should use R rates?
No, I don't remember discussing this. Rate, I know it, but what is R rate? I don't remember.
Okay. So basically I gave an example. Let's say when you are doing transactions on a daily basis, let's say you have received some invoice and you have received the invoice in dollar or euro and you convert that into INR. And you are doing this as a part of daily posting, right? In such cases, you can use market rates, M rates. But R rates are required, the regulatory rates are required in case of month-end closing, right? When you do the month-end closing, when you're doing something like your valuation, in such cases, you have to use R rates. R stands for regulatory rates, right? Because you should always do valuation, etc., as per the norms of the central bank. And for your own calculation, you can consider whatever you want. But in terms of the valuation or your month-end closing or your reports, external reports, you're supposed to use R rates. So that is the difference between M rate and R rates. Okay, but there can be maintained statutory rates depending on what kind of transactions you're doing. Whether you're an export company or import company, what kind of transactions you're doing. There can be other statutory rates also. Okay, like for example, for some countries like Thailand, there can be certain rates which you use for buy, certain rates you use for sell, certain times you use the average rate. So there can be different types of such rates. So then we spoke about interest rates and forward curves and bond yields. So these are nothing but different types of floating rates that we can actually use for integration with Bloomberg, where we can actually automate the floating rates. Because floating rates is something that you always don't know, right? That depends on the market rate, because that is the rate which the central banks give. So those things also you can integrate using a external partner. Okay. So let's talk a little bit about what kind of values you can create through Treasury. So this kind of things can actually be helpful for you in case you're having a conversation with the SCFO for any kind of sales speech, etc. Let's say that company was using Excel sheet previously, and now they want to implement SAP Treasury. So what are the value adds that we can actually do? So calculating forex exposure. So forex exposure is something that we discussed. So in case you want to understand your total exposure, you have to manually collect all the data from different payable or receivable reports, and you have to calculate the net forex exposure for you. You have to get all your foreign currency invoices in dollar, euro, maybe JPY, etc. And you have to calculate all the vendor invoice, customer invoice, and that to get the calculation manually. There could be foreign currency investments also. So those things have to be done manually in your Excel sheet and you have to get the net exposure. But in case you're using SAP, then system can generate a net balance sheet exposure with no manual efforts, and user can get everything automatically from the system in terms of the currency, date, etc. They can get everything from the system. How much is the exposure on which date in which currency? Those things they can get in the system itself. Is it clear?
So in order to maintain the exposure in SAP, so which module you're touching?
So in order to maintain the exposure in SAP, you have to implement exposure management.
Okay.
And there can be different types of exposure management. One of the most common types is balance sheet exposure. We'll be covering the balance sheet exposure also. So there are we actually implement balance sheet exposure by creating different types of, so there is a transaction where you can actually collate all the GLs and you can create different types of, I'll show you.
Is that part of the hedging, this exposure management?
Yeah, exposure and hedging will come headed, right?
So Vijit, what area we are going to focus? I know we talked about multiple things, cash flow, exposure management, and multiple. So what is our focus?
We'll be focusing more on the transaction manager only. That is what we'll be focusing. So actually, I'm planning to, once this slide is covered, once the month-end process is covered, we'll not go to too much detail. We'll cover till money market here, till slide 28. And once slide 28 is covered, what we'll do, I'll go to the system and we'll create one deal and we'll focus on the transaction manager part. That is what we'll focus.
Yeah, it answered my question, but I'm not sure whether how we will do the value add if we are just going through overview. like what is cash flow analyzer, what is exposure. So it's a very, very high level overview we are talking about. How about if we go like focus area, cash flow analyzer, and go deep dive into that?
Yeah,
Exposure.
that's exactly. Yeah, that's what we'll do. Okay, so let's do one thing. Let's just focus. Maybe we'll create one deal today and we'll focus on the transaction manager part, and then we'll take the topics one by one. So I wanted to give a overall structure of all the things, and then I wanted to start. But we can probably come back to the slides in some time, and we just focus on the transaction manager part, and then we'll come back to the things one by one. We can't cover everything in one day, so we'll focus on transaction manager part first, and then we'll, because if you don't understand what is flow type, what are the basic things, then it's difficult for someone to understand the whatever I'm explaining here, right? So I hope you guys have got some background now, right? So what we'll do, we'll focus on one deal, and then I'll give you some idea about the month-end process, and then again go deep into each month-end process also. Okay. So we spoke about this screen, company code, product type, transaction type, partner. We also spoke about the business partner details. So now we'll go and create this deal. So we also spoke about the flow type 1100, principal increase flow type. So now what we'll do, we'll try to create the deal number. Now this is nothing but this is a screen. This screen actually helps any end user to create a treasury transaction. Here actually we give some of the details outside, and once we come inside, we have different tabs. The first tab is the structure tab, where you have the business partner. So this gets defaulted from the input that we give. Then flow type is something we discussed, 1100, which increases principal increase. That means it's an outflow for you, 100,000.
Principal increase from what point of view? I make an investment, so my money is decreased, right?
Your money is
Or principal increase of the investment. This is
so basically this principal increase is a name of the flow type, right? And this is linked to a outbound flow type. That means money is actually decreasing for you, and you are actually whatever $100,000 you are doing a fixed deposit, that actually is a principal for you, and this principal is going to be an outbound principal. As you can see here, there's an outbound sign, right?
Okay.
Outflow. So this is like a name that that has been given here, principal increase, because I'm creating this fixed term deposit with the bank. That's where the flow type is A plus principal increase. But ideally, it's a outflow for you. That means you are actually committing the money from your company to the bank.
So principal here means the investment. The investment itself will be increased. Okay.
Exactly. Okay. So now let's say I'm starting my fixed deposit on 1st of April 2025 for next 2 years till 1st of April 2027. And inclusive, that will start is included here. Term category is fixed term, and can be at notice that a place for deposit notice. That means in terms of deposit notice, there is still no end date. But in case of fixed term, there is an end date that we actually give here. It can be fixed, and it can be amount, scale, etc. So in our case, it's a fixed term deposit. So now again, I'll give a percentage here. So let's have 5% interest. Okay. And
But the investment category, can you open it again?
Yeah.
What is a scaled interval or scaled? Sorry, I can't see it clear. But what's the difference between the 4 options?
So basically, fixed is, that means your whatever amount that you're giving, you're actually getting a fixed kind of rate every year. That is a fixed deposit, fixed. Okay. Then in terms of scales, that means that for every interval, let's say for the first year, it has a certain date. For second year, it has another date. For third year, it has another rate. So that means for every interval, the rate can vary. Incremental means, let's say on the first year, you get an interest of 5. On the second year, you can get interest of 6. On the third year, you can get interest of 7. And when you say amount, you know what exact amount that you'll be actually getting as an interest. So basically, you can define the amount.
Okay. So for example, if we had talking about fixed, so I have 2 years. If I give it 5%, so The first year 5%, and the next or the second year also 5%.
Correct.
Or scaled, if it's scaled, the first year maybe 5%, and the second year maybe 7%, for example.
Right.
Right?
Correct.
So scaled is differentiated or different from year to year, right?
Correct.
Okay, you got it.
What is that inclusive? Start included means?
Inclusive means when you're calculating the interest, you're also including the first day. That means the interest will be calculated. It will also calculate the 1st of April day as a interest for your.
So probably the concept might be that, because on the first day you are distributing the money, whether the interest should be calculated on the first day or not, depending on the bank's terms, they may include and they may not include, because effectively on the first day the transaction is just happening. It may not start accruing the money. This is what it is.
Correct.
So I think it will depend on what type of conditions you have with the bank, and according to you will define whether start is included or end is included, because only one day can be included, either the start date or the end date. Because on the end day also, let's say at 10 a.m., if the deposit comes back, then you should not include the end.
You can actually include both. You can, if you click on this.
Everything depends on the condition, what your terms you have with the bank.
Correct. So depending on the way you have negotiated with the bank, you can make your choice in the drop down here. And based on that, the SAP will calculate your interest.
Sorry, but can you repeat the inclusive again? I can't understand it.
So basically, inclusive means when the interest is calculated on the principal at the time, does it include the start date, or does it include the end date, or does it include the both, or does it exclude the both? What kind of condition that you have with your bank for the calculation of this investment?
Sorry, but can you give an example?
So examples here. So if I just open Excel sheet,
Okay.
if you have a fixed deposit and if you have 5% rate, right? In such case, you calculate this one into. This is the interest that you will get for 365 days. 365 days, right? So let's say you start your investment 1st Jan and you continue till 31st of December. You are supposed to get 5,000 rupees interest in case both the days are included in your calculation. But in case both the dates, like first date, this is your first or starting date, right?
Okay.
And if both the days are included, that means you are getting the money for 365 days. So you should get 5,000 as interest. But if you don't want to include the first day, that means you will only get interest for 364 days. So your calculation should be 5,000 divided by
365 into 364.
Correct. So then you will get 4,986. And if you exclude both the days, then it will become 363 days. So you will get money percent into 363 divided by 363. So depending on the terms and conditions with your bank, you can actually include both the days or just one day or the end day, like that. Is it clear?
Yeah, right. Thank you.
That means including start date means does not exclude end date, right? It is we are assigning including start date.
By default, actually, the start date is included, but the end date is not included. That is the by default structure. But you can actually adjust it accordingly.
So fundamentals are very clear. If you think about from business perspective, when you open an office at 10 o'clock or maybe 11 o'clock, you will transfer the money to the bank for the deposit. Now the bank may say the day has actually started at the 12 o'clock in the night. Fine. So that bank may say that I am not going to pay you any interest because half day has been passed. Okay. And similarly, when you are going to withdraw the money, you will probably withdraw the money around 10 a.m. or 11 a.m. during the last business day. Now, on that day, there is a dispute whether bank want to pay the interest or not. So that's where the conditions are talking about. It's first or last day, both are included or not included, depending.
Right. Okay. And so let's move on. So then we have got the condition type and condition group. Here the condition type will be by default the company interest. And you can also expand this section. You can actually give few more sections here. like working days, due date, working day calculation, etc. Here we have got the repayments method. So repayment method actually means how you are making the principal payment back to the bank. Whether you want to pay them at the end of the term, or whether you want to pay them, at the annual basis. Like I can also here don't have it configured. We can also configure it so that we can pay it on an annual basis. And same goes for the interest. Here I've selected at the end of the term. That means principal and the interest will come together as a compounded interest. But you may choose to receive it on a monthly basis, or you can also choose it on a quarterly basis. Like I'll choose as quarterly basis. That means I'll be receiving the interest every 3 months. So if it is quarterly basis, then frequency should be monthly here. And you should mention 3. That means every 3 months. That means every quarter, you will get the interest. And contract date is something, contract date means this is actually the bank, and the contract means a hard paper contract. Like if you post a invoice, you will have posting date and document date, right? So can someone tell me the difference between documented and the posting date?
Sorry, come again. What's your question?
When you post an invoice, let's say in FP60, you will have posting date and a document date, right? Can someone tell me the difference between posting date and document date?
Document date is the invoice date. Yeah, and posting date is the day when you're posting the document. It can be the same, it can be different, because the invoice date can be, an earlier than the posting date. And then you probably might like to, consider the payment terms based on the invoice date, which is going to be document date, or, depending what or posting date, So, yeah, so document date is the basically vendor invoice date.
Correct. So this is similar to a document date, contract date.
So conceptually, it on an instrument, it does not have any significance. Is my understanding correct?
Correct. This is actually the hard copy
Yeah.
date. Like for example, when you're creating the fixed deposit or some investment, you will get also a hard copy date. That the bank, you're negotiating with the bank that I'm going to start on this date. So that becomes your contract date. Sometimes
It's a document. The day on which that conditions were signed with the bank, you know what, we are going to make a deposit on this day, on whatever day. So this is going to be the terms and conditions. So that the document when it is signed, that is called contract date. That's what you're saying.
Correct. So let's say you go and speak with the bank on 1st of March, and you negotiate with them that, hey, I'm going to start a fixed deposit 1st April, and I want a 5% fixed rate. And they agree, and then you negotiate, and then you agree on a term paper or something. And that is contract date is on 1st of March. So then you can put 1st of March as your contract date. But contract date should be always earlier than the start date. That means when you're starting the investment, that is when the calculation will be starting. And contract date is more of a paper date. So ideally, before the calculation of the interest starts, you should negotiate all the terms and conditions, and you should put everything on the paper. So that is what the contract date means.
A condition type in the section of interest structure, and there is another one in a repayment structure. What is the condition type?
Okay.
Hey, ZaranTech now offers SAP corporate training. That's right. Train your workforce in SAP with our comprehensive program. We offer customized courses, certified trainers, and hands-on labs for both individuals and businesses. Our standout features? Bespoke training, fully configured servers for practice, in-house materials, and a dedicated LMS. Plus, get session recordings and 24/7 support. From functional to technical modules, we have got it all. Choose ZaranTech for SAP training and watch your team excel. Learn, upskill, succeed with ZaranTech.
Okay, I'll just take you back to so this is a basic. Actually, I wanted to cover some of the basic things first. But anyway, so I'll just quickly come back to this.
One small question. So this contract debt has no significance as such from the calculation or system perspective. Is my understanding?
Condition type?
No. Contract date does not have any significance.
Contract date does not have any significance in terms of calculation or anything like that, right? That is just for our practical purpose, that's all.
Yeah, just for a documentation perspective.
Right. So before you understand the condition type, Let's also spend a minute for something called update type. Okay. And then we'll go back to condition type. So update type actually is a very important parameter, which also helps us in accounting. So basically the flow is like this. I think I have some document also. It's pen somehow. Let us, how to get rid of this pen? Does anyone know?
What is the question?
No, somehow I've got this pen, but I don't want this pen because I'm not able to go to other screens. It's
Okay, I think you have to click on somewhere on the ribbon. Okay.
clear.
Or clear escape. Click on escape.
Escape will not work.
Don't work.
You just right click. Let's do a right click.
Oh yeah. Now it has got it. Okay, yeah. Thank you. So, yeah, good. So basically, let's just have a look at the account determination flow type. Okay. The account determination flow type this is how the account determination flow type works. Okay. We'll actually come to the meaning and everything, but just understand the flow type first. So let's talk about a foreign exchange 60-year product. So something called product type. Okay. Product type is linked to transaction type, which you already know. Then transaction type is linked to flow type. Flow type means it can be principal increase, decrease, interest increase, decrease, bank charges, nominal interest, and so on. And under flow type, we have something called update type. So even if I say 1,000, which is let's say buy transaction for a forex, again under buy there can be like FX1 or 100 plus and then FX200 minus under sell. That means this is actually another, you can think of it like a sub condition under flow type, which controls the accounting. Okay. Then update type is linked to posting specs. Posting specs is linked to the account symbol and account symbol is linked to the GL. So this is the overall flow for the account determination in Treasury. So now if we look at the update type here, basically it means update types carry information about the flows to accounting and the position management. You can create update types in the configuration. We'll actually create this. So one update type can be assigned to different usages. Like for example, there are some examples that have been given here. What kind of usage that we have for update type, like key date valuation. So what is key date valuation? That means foreign currency valuation or bond valuation. In such cases, you have to assign the update types for the valuation. Similarly, there can be update type for business transactions. So if I just go here, this is called position management procedure. We'll discuss about position management procedure later. But I just want to show you what is update type here. Yeah. So these are some examples of update type. Okay. So this is actually more of a configuration linkage. Okay. So you can think of it like, I think some of you guys are familiar with electronic bank statement, right?
Yes.
External transaction case from the electronic bank statement.
Yeah, it's kind of like that, which actually helps you to link the posting specs. How do you really link your flow type with the posting specs? So this update type is
posting rule levels will be maintained there.
Correct, exactly. Posting rules will be maintained because one flow type may be used for a certain principal increase, but that again depends on the type of transaction you're doing. Because let this principal increase, that means you will post it in TBB1. It's the transaction for posting your accounting for the principal. Now, when you are doing the valuation, that same principal will be used for a separate kind of a treatment. If you're doing accrual, again, accrual will be the interest. Maybe there can be something else. So depending on the type of transaction that we're doing on that same flow type, the treatment can vary based on transaction to transaction for the same deal. So this transaction to transaction variance is carried out by something called update type.
You mean update type equal to like that?
No, not exactly equal to posting rule, but it's a step before posting rule. It's update type actually is assigned to posting specification. I showed you that in the previous video.
So this when you created a D instrument, do we define this update type somewhere, or this is derived automatically by the system depending what type of transaction I'm doing? Like for example, if I'm making a deposit in the bank, then it's a transfer of the money from the company to the bank, right? So is that something determined in the background?
Yes, it's something that happens based on the configuration. User does not have to choose the update type. User just has to choose a product type and transaction type. The flow type and update type will be automatically determined. Flow type will still have some manual control because sometimes, let's say, I want to add a bank charge. That is not part of the deal. And bank charge again is that depends on the deal to deal. In one deal, the bank may charge you less, the bank may charge you more. So that will be somewhat, there will be some manual control. But update type is completely automatically controlled based on the configuration that you do in the backend.
So just to add here, so actually update types carry all this cash flow information. So whatever the flow has been created, that flow info will be carry forward to update type. So update type, which basically picks from the position management procedure. So PMP, there is a right from there
Right.
where you will assign the update type. So that the PMP will automatically is like where it will be the position for the trade to create a trade. That is the base actually to create that all the cash flow information. That cash flow information will be carried to update type, and update type again will be linked to this whatever that posting specifications. From there it will link to your GL information, and again to classify that.
Basically,
Yeah.
okay, so basically based on the type of flow which is happening, this update type is a one more step to determine the correct GL account, what we want to do. If the bank charges are there, or if it is interest, it is accruing or something else, we might like to define a different GL accounts to be posted. So that creates as one of the key.
GL classification again it is a different aspect actually. So the update type only carry forward the whatever the flow cash flow information will be. From there again update type you need to link with the posting specifications. So that determines whether it is a bank posting or position posting or any bank related charges. From there again you need to link with your GL accounts. So there again there is a separate concept of account reference AAF, account assignment reference. So which classify the GLs.
Correct. So basically, this position management procedure is something that we used for valuation and other things, which actually, depending on the type of transaction that we're doing, right? That is where this update type actually becomes quite useful, because the same flow type can have different types of cash flow. So how do you control that? That is where the update type, you can use update type for, like when you, okay, let's again go back to this position management procedure. So let's say I'm using 4,000 procedure. Okay, so inside it, you will see that there are different types of valuations, reset, etc. Right? Foreign currency valuation. So every type of valuation is linked to a certain default update type. When to 02 is asset.
And what is the significance of this? Maybe I think when we go through the whole picture, maybe it will become more clear.
Yeah, it will be more clear. So just understand. So like, for example, again, for me, it's quite long time. But even in asset, right? In asset, due to the account definition for asset, depending on the type of transaction you're posting for asset, you will have different ways of linking it, right? So can someone remind me on that? I think it is very similar to that. Where
okay, I get it. For depreciation or I remember. Okay, so
right.
Yeah. Okay.
So can you remind us about the asset part? Because for me, it's probably been more than 10 years when I worked in asset.
Yeah. So in the account, in the asset, when you have an account determination, you basically, there are multiple activities which can happen for an asset. You might have a depreciation, you might have a retirement, you might have some investment management, you might have a different type of transactions out there. And for each type of activity in a set, you might like to define a different GL accounts. So we basically directly define the GL accounts there.
Yeah, correct.
Maybe this is something a little more advanced.
Correct. So here instead of GLs, we just put the update type, and in update type you link with the posting specification. And in the posting specification, you have the account symbol, and then in the account symbol, you have the GL. So you can think of it in slightly different way, but it is very similar to that.
I get it.
There are some more examples. Update type for direct business transactions. If we go through this, these are different position management procedures. So let me just go to 4,000. So here you will have different types of inflow, realized gain loss, amortization. So here, everywhere you will see that you have the provision to give the update type for different types of transactions in terms of amortization or inflow or realized gain loss, transfers, interest, valuation, even for hedge accounting, right? So you will have this type of update type that you can actually link to different types of transaction under the same position management procedure. So we'll discuss about the PMP procedure in details later, but just remember that this position management procedure is something that is widely used in Treasury. And this is one of the place where type can be assigned to different types of transactions based on the PM. Okay. So now we'll go back to the hours was money market, and I think we saw this here, right? Money market, shuttle. Yeah. So here you can see, so again, we generally don't change these settings. These are like most of the times you can utilize the standard settings here. So here you will see that we have got condition type like money market. So this money market actually is linked to flow type 1100 principal increase inflow. And again, it has a certain update type MM1100 plus linked to it. Okay. And similarly for principal decrease, you have some update type linked to it. So every update type and flow type will be linked to this update type in a default condition. Okay. And under the update type, you'll also have this condition type. So let's also understand this condition type. So this condition type is something that will affect the transaction types on money market. So let's just go inside the condition type. So we have condition types like final repayment, installment repayment, annuity repayment, capitalization. These are default condition types that we have. So you will see all these things are again default things which are put here. And every condition type is assigned to a transaction type. So in our case, 51A100 is the investment. And you will see that we have got this 1120 final repayment assigned to this 51A1120. Similarly, we'll have for investment, we have got the condition type for principal for interest. So these condition types are all defined in the standard. So 1200 stands for the nominal interest. That means this condition type will be automatically linked whenever we have any nominal interest condition for the fixed deposit. So this is how it's going to be linked. Okay. So we'll move to the next tab. Yeah.
We have a year for 365 days, right? Why you are taking actual 360 days? We have per year 365 days per year, right? Per days. You are taking actual 360 days. Why take 360 days?
So this is actually defined in the product type. So if we just show the product type.
Meaning maybe
That
5 days to be, yes, 5 days to reduce. Why reducing 5 days?
No, not reducing. So basically, this is nothing but actual by 360. That means whatever you will receive for your interest, right? You will actually calculate. Let's say let's say you have kept this fixed deposit for 2 years. Okay. So whatever number of days you will keep, you will divide that by 360. So that will depend on your bank, because a lot of banks actually consider 360 days as your 1 year. Okay, but if you're negotiated with your bank and you're okay with 365 days, then you can mention as 365 days. Okay. Or in case you want actual by actual, because there's something called actual by actual also. Yeah. There is something called actual by actual. That means whatever number of days you're keeping, the bank will actually consider that as actual by actual. So in my experience, I mainly say actual by actual, or it can be actual by 365 or actual by 360. These are the common interest calculation methods which have been used. When you say actual by 360, I understand what you're saying, that you are dividing it by 360 days and not by 365. But that's a common way the banks actually operate. And then we actually accept that also. So it depends on the way you're negotiating with the bank.
Okay.
It's all depends on your bank requirements. So whether to go with 360 or 365 days, again, for this, again, there is your calendar will be there. So how to calculate the interest, which are the bank holidays, which are the business operating days. So it will just take only those days to calculate the interest.
That's true actually. Like for example, if you want to shift, let's say your last day is coming on a particular holiday and you have to pick up, just skip that. So actually you can make it like a next one day for your calculation. So there can be other conditions also, right? Okay, let's go to the administration tab. So the administration tab will have something called facility. Facility is nothing but it's like facility is actually going to help you safeguard yourself from some kind of a limit to how much you are going to take loan from that bank or how much you want to invest on a certain bank. Let's say you want to make sure that you don't invest more than 1 million in Citibank, right? So in such case, you can create a facility with this particular business partner. And in such case, if you're, let's say you have different users in your company and they all create different investments with Citibank. But as a CFO, you want to ensure that you don't over invest in a single institution because you want to protect your money. So you create a facility and then you assign the facility here. And you can also make this field mandatory. In such way, even if someone is not filling this up, then the transaction will not be saved. So in such a way, what will happen is, so basically what I was telling, facility is something which helps.
Yeah, to some extent.
Okay. So you can link facility to very similar to like a credit management where you want to invest. So yeah, we're talking about facility, right? Yeah. So basically what I was telling is that so facility is something which actually helps you control how much investment you want to do for a certain business partner. Right. So facility is like another deal that you have to create. And then you can link that facility deal to this particular investment. And you can make this facility also as a mandatory field in such a way, because let's say you have got 100 treasury users in your company. And as a CFO, you want to make sure that you don't over invest in one single business partner. That means, let's say your business partner is Citibank and you have $1 million that you want to restrict, that I don't want to invest as a company more than $1 million in Citibank. In such case, you can actually create a facility of $1 million with Citibank, and you can link the facility with different investments that are happening. So the advantage is that if you want to hard stop, let's say after $1 million, you want to make sure that you don't want to create another investment with Citibank or with the same business partner. The system will not allow you. You can make this field mandatory. The moment they key in the facility of the Citibank, the system will not allow you. Or in some cases, it can give you warning message also that, hey, you're investing more than $1 million in Citibank. Is it fine with you? At least you know that you are over investing in one bank. So this is the control that we have for facility, but you want to make sure that you don't over invest in a single business partner. Is it clear?
So the facility can be investment or borrowing?
Yes, it can be used from the.
Okay, so I can divide it to many product types.
Sorry?
I can divide the facility to many product types.
Yeah. So facility will have a different product type of its own, but you can use multiple product types also for the same facility.
What I mean, for example, when I have a deal with a bank to take a credit for 1 million, so I can divide it to letter of credit and loan, short-term loan and long-term loan. It is possible, right?
Possible, yes. Actually allows you to link multiple product types to the same facility, because let's say you have some long-term loan or short-term loan or medium-term loan. You don't want to restrict it by the product type. Like you want to make sure that you link different types of investment on loans into the same facility, because this is more at the business partner level. More than the product type, our focus is also on the business partner.
So the one facility for one business partner.
Correct. One facility for one.
I have another question. When I create facility, there is no financial impact, right?
Right. There can be some bank charges, but
Okay.
otherwise there is no accounting entry.
Okay. The facility itself, it has account in the chart of account.
Sorry? It has?
The facility itself has an account or a GL account in the chart of accounts?
No, it does not have.
Okay. But the component of facility has, right?
Yes, the loans and investments and other things, packing credit, all those things will have GL,
Okay.
but not the facility.
Can I assign one facility to loan and investment in the same time?
You can do that. Yeah, that is also possible. But generally facility is more utilized for investment, because if you're borrowing money from some bank, then it's not your responsibility, right? I mean, it is the bank's responsibility to ensure that you pay them back. Generally, if you're investing money, that's where actually you have to make sure that you protect your money. Correct.
Okay.
Yeah.
Thank you.
So we discussed till facility. I hope this is clear for all of you. So then we have got portfolio. So again, portfolio is something that we are not covering as part of this trade. This is part of the portfolio analyzer in case we have. So let's say this is actually applicable for such case for cases where you're building a portfolio of your company and your different types of investments, and you want to make sure that you kind of analyze your portfolio against the market returns, and then you can make a decision whether your investments are in the right direction or not. In such cases, you can actually assign portfolio, and that will actually help as a base for your portfolio analyzer report. But again, this is not part of our scope. This is again quite advanced treasury things. So we can go to the guarantor finance project. So these are again some of the fields which we can use for reporting purpose.
Portfolio, for what?
So there is a separate module called portfolio analyzer. Okay, portfolio risk analyzer. So some financial institutions use this module to compare their portfolio with the market. So there are some market benchmarks, right? And they want to make sure that whatever portfolio they have, they compare their portfolio with the market benchmark. Portfolio is nothing but, let's say if you have a financial portfolio, right? Let's say you have some fixed deposits, some mutual funds, some equity, some debts. So you have a overall portfolio for your company or your individual. So that is called portfolio. And your portfolio has certain risks and certain rewards. So risks are what kind of risks you're taking with respect to the market, and what kind of returns you are earning. So there is a way to actually analyze your portfolio with respect to the market. For an individual, it may be small, but for a company where it has many joint ventures, subsidiary, investment loans, it may be quite complex. So that's why there is an advanced one called portfolio risk analyzer, which can help you analyze your portfolio and compare it with the market benchmarks.
What aspects I can classify a portfolio?
Sorry?
What aspects can classify portfolio based on? Can have more than one portfolio, right?
Yes, you can have more than.
What is the criteria of classifications of portfolio?
So that will depend on the way you actually want to analyze. Like if you want to keep different portfolio for your company, right? Let's say you have different business subsidiaries. You want to keep different portfolio for different business subsidiaries, or you want to keep your equity and debt portfolio separate. So that will actually depend on.
Yeah, can I classify portfolio based on counterparty?
You can, yes, you can.
Yeah, portfolio analyzer, if it is part of the TRM, is there any reason we are excluding that from the training?
Also, see, the thing is, treasury itself, it's very huge, right? You can't cover everything in treasury. So we are covering some of the things, and some of the things are actually not part of this training. So it depends on what kind of expectation you have. And again, we are trying to cover some of the things which are more commonly used, and some of the things are not so common. Like portfolio analysis is something which is only used by financial institutions, not by other manufacturing or other companies, right? So, so this is not a very common thing that actually is available in the market. So that is the basis of the design of this course.
Okay, got it. Yeah, thank you.
Just to add here, so without using portfolio analyzer, so with the concept of portfolio here in the deal, so it clearly says that where you can assign this portfolio in position management. So let's say that wherein for every product you can able to create a different portfolio, so you can map to each product type this portfolio, and wherein you can able to show the report in TPM 12 with the using the configuration of differentiation criteria. So where you can able to show the report, for example, for this portfolio under this product is assigned, so where you can see the complete list of cash flow, how much is the book value, how much is the position currency, how much is the valuation currency, so that end of the day you can able to collect the complete the book value under these product types. So all this under this product type, you can collect this list of the transactions whichever is created. So without using portfolio analyzer also, you can use for the reporting purpose.
Yeah, that also you can use, but that is just that will actually not help you much because anyway we have.
No. It will help you because right now in none of my project I'm doing it for the securities model. So for where we have a bonds and stocks and also corporate actions for each product where we have assigned the portfolio, and based on that we have created a report where it will give you the report for the cash managers and the CFOs, where they can able to see the complete the book value. Based on that, they can take the decisions.
But that decision is the basis of what investment, or is the decision position?
Yeah, so based on the position only, you can take the decisions, right? Whether every day it's taking the your value is going up or down.
So yeah, so again, so it depends on what kind of decision you're taking, right? If it's more of a position management decision, that we can even do it simple, put 1 or 2 portfolio. But in case they want to analyze the characteristic
So
structure,
generally, I'm saying that portfolio can be used without using the portfolio analyzer, where you can use for the reporting purpose.
yeah,
Where you can able to segregate your product type, where you can able to segregate your counterparty, and you can show the report. You can just analyze the reports, and you can end of the day that are month end or quarterly, you can check the reports.
yeah, that. So that then it becomes very similar to like even we have additional fields like assignment, internal reference characteristics.
No, that is for these fields, additional fields. Again, you require a separate customization is required. This is a standard which is already linked with the position. So position management.
Right.
You go and see that there is one configuration is there, differentiation criteria, where if you assign that field in that particular there, so automatically that field will control you the entire report, and where you can use those in your TPM, the position management report.
Right. Okay, I think we can move on to the general evaluation class. So this is something that will get defaulted based on the configuration. So you're also talking about the valuation class, right? So this is something that whenever you do the valuation class configuration for different types of product, you can assign as a short term or long term. And based on the product type, transaction type, it will get defaulted. But in case you want to change it, you can still have the option, to change it in the general valuation class in this particular field. Yeah, okay, let me show you.
The concept.
Just to explain, it's better if I just.
Is there a document contain all configurations? Is there a document contain the configuration?
We have some documents which also have a configuration that we can share with you.
Okay.
Yeah. So let us talk about the valuation class. So this is again something which is one of the configuration where we define a valuation class based on a combination of company code, product type, transaction type. Okay. So general valuation class should be assigned to every transaction from which a special valuation class can be derived. We can generate a valuation class based on the combination specific to company code, product type, and transaction type, and use it as a default value on entering a transaction type. So these are the things which are required when we create a valuation class: company code, product type, transaction type, and as an evaluation class. So let us just go inside this. So yeah. So here we can. So let's just go to 1710 company code. Yeah. Okay.
What valuation class controls in the system?
Sorry.
What valuation class control in the system?
So it actually controls what kind of. So see, the thing is, you may have multiple product type or transaction type, right? But you want to kind of assign your long-term. Maybe see when you're categorizing your GLs, let's say long-term liability, short-term liability, long-term asset, short-term asset. In such case, you have certain classification. So it may happen that some of the product types will be linked to the same valuation class.
What sets ZaranTech apart in SAP corporate training? It's our unique blend of expertise and innovation. We offer customized courses tailored to each client's needs, ensuring relevant, targeted learning. Our vast trainer database brings you wisdom from the best in the field. Need resources? Access our extensive training material repository anytime. We are all about measurable results, providing detailed student metrics to track progress. And we don't just teach, we build community. Join our thriving social media network, connecting learners beyond boundaries. With ZaranTech, you are not just training, you are transforming your SAP expertise.
And this valuation class will actually control your liability or asset account, etc. So this
It's a valuation class in OPYC. It control the account determination.
correct. It's not exactly similar, but kind of it's slightly similar in the concept where we actually determine. See, valuation class, there may be some overlap. That some valuation classes are overlapping with the same product type and transaction type.
Okay.
Okay, so in such cases, you can assign this valuation class in this product type and transaction type, and that same valuation class will come and get defaulted in your deal. And like someone was asking about the reclassification, right? How do you reclassify from long-term liability to short-term liability based on your rules? We have some financial obligations. In such case, also the valuation class should be changed. And automatically the GL will be changing for you. Okay, so this valuation class is quite important concept which we assign in this particular place, and whatever default value we assign here, that will actually show in this administration tab here, and we still have the option to change it.
Okay. What I assign in a configuration to product type, I can see here in this transaction, right?
Correct. Right. Okay. So then there's some more.
Can you open again? Can you open here again? No. FTR create the option of.
Okay.
Okay. Here we have two short-term investment. What I understand, the first one have an account different from the another one.
Right.
Okay.
So then there are some additional fields like assignment, internal reference characteristics. So these are some additional fields which are given by SAP in order to track. Like for example, you are using some kind of trading platform, and you already have some reference number for your deal that is created, or maybe you have some fixed deposit number that you want to store here, right? So in such case, you can use these additional fields for your reporting purpose. Okay. So I was showing this presentation, right? Cash flow type. Let us link that presentation with this. So I mentioned about this cash flow types like legal expenses, mortgage fees, upfront fees, stamp duty. So this is one place. If we configure these flow types correctly, then this is one place to actually assign this additional flow type, and that will be a manual flow type for you. For example, if we just check the cash flow now, you will see on 1st of April, there's a principal increase or outflow of $100,000. And based on the 5% interest rate, every quarter, 5% interest rate, this is a base amount. For 91 days out of 360 days, it has calculated this much amount, 126.89 for this from 1st of April to 1st of June, inclusive of 1st of April and taking actual by 360, and it is linear interest. Okay. So now this is what has been calculated on 1st of June. Similarly, for 1st of October and 1st of Jan 2026 and so on, every 3 months, interest has been calculated for this number of days. Since the number of days may be between 30, 31 days and so on, that's why the amount is slightly varying here. Now, once this interest is calculated, then we have the final repayment and the final interest on 1st of April 2027. So this is what is the cash flow at this stage. This is actually quite important. This is clear for you guys, right? This is outflow of my principal, and this is the final repayment where the same outflow is becoming inbound for. And this is again interest income for me because I have done investments every quarterly and interest income of around $1,200. Is it?
The payment currency is not local, but the currency of the deal, right? We have a rate in OB08. If I want to don't take this rate, I want to put a different rate here, different from 08. Can I put another rate here?
Yeah, you can. You can You can have foreign currency investments also. If you have foreign currency investment, you also need to maintain the rate. What I'll do, let me first create this deal in dollar. And once this deal is created, then this is a 1710 is a US dollar. Let me just quickly verify. This is the USD company code. Yeah, this is a USD company code. So let's say you are also in some, you have some investment in Euro. Okay, and you are creating Euro investment. Yeah, so you can also have currency, and you have to mention the currency in the beginning of the deal, and then you have to also this is the USD company code. 1710 is a USD company code. Okay, so since I have also done the investment in dollar, that's why there is no foreign exchange rate here. But it is possible to have a foreign currency investment also for treasury. So what I'll do once this deal is created, I'll also create another deal in Euro, and I'll show you foreign currency investment also.
Okay, thank you.
Sure. So for now, this cash flow is clear, right? Because I would again request, in case someone is having any doubt on the cash flow, please let me know, because this actually is basic tech, how the cash flow is getting calculated for the treasury in terms of the interest and principal, how the final repayment is happening. Once this is clear, then we can proceed on the next step. Is it
Cash
clear?
flow is fine. Cash flow is fine, that we understand. You are explaining some other flows. Other flows is like some exceptional charges, is it? Which is
Correct,
not
correct.
going to come with the regular terms?
Correct. So it not exception, but there can be some other charges, right? Like a bank charge or some bank.
And maybe some penalty or
Yeah,
anything.
maybe some legal fees or penalty. There are different types of fees. Fees can be there, upfront fee, etc. So once this cash flow is clear, right? So now let's say on 1st of April only, when you're depositing the interest, the principal.
One more question, sorry. What is the significance of this lock here? In the left side, you see the lock. Is there any?
I think, okay, so
significance
basically
in-
this, yeah. So since this deal has not been posted yet, this deal is still at initial stage. This is showing it is as locked. That means it's actually still blocked for posting.
This means there is no accounting entries yet, right?
Okay.
Right.
Yeah. Well, as soon as it will start, the transaction will start following up. Maybe this lock will keep opening. One by one.
Correct. Right. Sure.
What is the control of the status? Is the date of payment or do a posting on the system?
We can actually make the posting. There's a transaction through which we can make the posting. Once the deal is created, once you settle the deal, then we can also post the principal, interest, everything, that start posting.
Okay.
The configurations are correct, then it will start posting. If there is any issue with the configuration, it will give error. You have to look into the configuration in such case. Okay. So now that this cash flow is clear, let me go to the other flows. Okay. So now what I'll do, so let's assume that on 1st of April, we have a principal of 100,000, and I'm going to add some charges on the same day. So let's say again, this is a outflow. So let's say the bank will be charging $80 in dollar, and let's say on 1st of April. So I'll go to cash flow. So now we will see another flow type 1900 as charge of $80 outbound on the same 1st of April day. So the cash flow actually gets impacted as and when we add certain thing in the other flows here. Okay, and here the posting status will be blocked for posting. So now I'll go to the payment details tab. So
Is
this
there
is,
an workflow here?
sorry,
Is there a workflow?
that we have to check the configuration, but I'm not expecting any workflow in this standard configuration.
When you open it, it was flagged for posting, or there's many status. So is this status require an approval, or yes?
No.
Posting?
But this is just a standard way of showing it that it is not posted yet.
Okay.
Yeah.
So do we have any workflow concept here in Treasury module, like you have, in the BCM, everything, like all the payment runs now can be approved by, senior manager or whatever. Is that type of workflow concepts are here or not?
So that is controlled through the activity. So here, we have the activity as contract now, right? So this is something that is done with the front end office. Now, let's say there is someone senior who wants to come and check that this deal has all the correct information or not. So then they will actually go to another transaction called FT_edit, and they can actually check if everything is fine, and then they can settle the deal. So we can control
But
that.
does it create any sort of a workflow messaging?
No.
No?
That is more like you can think of it like, let's say when you're posting an invoice, right? You can park the and someone can park and post the invoice, right?
Yep.
Yeah. So this is, you can think of it in that way, that there is some kind of validation that yes, it is correct, and then the accounting team will be separate. But that is not like a workflow of like, not like a bank workflow.
I get you.
Okay, so coming to the payment details tab. So this, I was showing this actually yesterday in the business partner. Let me just show you once again how this payment details are coming up.
Is the TR create has a field status, so I can hide some field and add optional field, or this is the standard?
The standard one that we can see here. We have some options to adjust some of the fields and all that we have to actually see. But generally, whatever standards are there, it actually shows here.
Okay.
Yeah. So this is a transaction that has been done in dollar USD. So as you can see here, we have the payment details tab, and in payment details tab, it actually creates two transactions. One is for outflow and one is for inflow. Okay. So this plus stands for inflow and minus stands for outflow. So here we have inflow, which is USBK2, and outflow is also USBK2. So both the house bank and the account IDs have got defaulted.
Can I put another currency here not defined in business partner master data?
Yes, you can. You can put another
You
account.
define euro and USD. Can I put in FTR create another sterling in the?
Yes, you can. So if you want to change the house bank here, just double click here, and here you have the option to change it.
Okay.
You can choose whatever house bank you want.
Okay.
So basically, this means that whenever any payment is coming or going, this is the house bank that will be used to actually receive the payment, or this is the house bank that will be used to make the payment. Yeah. So this is the inflow. Let's go to the outflow. So it is actually using the payment request concept, payment request with. Let's see. Let's go to the staff. Okay. We'll go down this, and we'll go to the interest rate adjustment. So this actually doesn't apply for us, but this would have applied in case we had some floating rate interest. Then we can actually use interest rate adjustment, and we could actually see whether the fixing has been done or not.
What's the difference between interest rate here and the one in the first tab?
No, so in the first tab, we have taken the fixed rate interest, right?
Okay.
And in case we take a floating rate interest, and in case the interest rate varies, yeah, like for example, every quarter the interest rate changes, like a live borrowing, right?
Okay.
Such case,
So I can add here the fixed rate. Sorry, I can put here the changed rate and the date from to, right? Here.
correct. If the interest rate is varying, if the interest rate is a floating rate, in such case, you can actually use this fields to actually control. Like for example, whether we have done the fixing in the sense whether for last quarter the interest rate has been fixed or not, whether it is actually fixed in the system. Like when you have a variable rate, on every quarter you're supposed to actually plan the transaction. That also we'll discuss separately. But what happens is when there is a variable rate, the government gives you the rate for that quarter. So you can only know the fixed rate for that quarter. So you have to fix the rate.
Here.
For last quarter, it is 6.8. Then again, last to last, it is probably 6.1. So every quarter, the interest rate varies. In such case, this interest rate adjustment tab actually becomes useful.
How to add the line here?
Yeah, come only if you use a floating rate. Otherwise, it will actually become not applicable.
Sorry?
This values will only come if you have a floating rate, like means variable interest rate. But ours is a fixed interest rate, right? That's why it is coming as blank.
If I change it in the first tab from fixed to scaled, I can put here a line.
Correct. Okay, so let me save this.
What about for the remaining tabs?
Yeah, we will also cover that. I'll just come back to the main tabs which I use. Other tabs are more from reporting standpoint, but yeah, let's just go through. So this instrument has been created successfully in 1710. So let's just go back to that. So you can just click on edit here and you can display the same transaction number.
Sorry, can you back one step?
Yeah.
Is each one of these status can be assigned to a specific user? or once the user have the authorization to this transaction, can do anyone from this?
They can't. Let's say if a user does not have authorization to change the deal, if he clicks on change here, then you will get an error that you don't have authorization. Maybe he can only display, or maybe he can only settle. On the authorization, if he tries to other activities, system will restrict him from other activities.
Okay. Okay.
So
I'm sorry for interrupting you when you speak. I'm sorry.
no worries, it's fine. So let's click on display. Okay. So these are the things that actually gets displayed, and this is again based on what you've created here. So let's just go to the tabs. So again, these are all descriptions. If you want to put some description here for trading back office, you can put those details here. Similar.
What is the memos?
So these are just for some description. Like for example, you want to just keep a track of the trading or back office, who is doing the trading, who is doing the back office, all those things. You can just put some description.
Is it like notes?
Notes, yeah, right. Then partner assignment is also similar. If you want to keep some details of the partner list, then you can put the name and address of the business partner, relationship, end of the relationship, all those things you can put here. So this actually shows overall user ID, timing, activity, whether it is in contract status or not. These are just simple. If you have GL master, you have seen, it also shows some similar values, right? The status of the and parameter. So then again, these are also some overall reports and information that it shows for the deal. For example, the deal is valid from 1st of April 2025 to 2027. These are the business partner details that we have. These are transaction number. This is in dollar. It just shows some general information. So here, this just shows the default risk value. So these are again based on the risk value settings that we have. It just defaults the values that we have from the configuration. And this is again money market. The business partner number it shows, and it shows entered by user. So again, these are just for information purpose. I think this interest rate adjustment, these tabs are important. After that,
we will discuss the risk rule and all stuff related to risk in the upcoming session, right?
We will discuss, but we'll discuss more on the exposure, hedging, balance sheet exposure on those sides. We will not cover everything related to risk.
Okay.
So this
interest is different values is there each quarter. You say that fixed rate, it will be fixed for all quarterly.
Yeah, this is because the number of days are different. Like if you see here, from 1st of April to 1st of June, it is 91 days. So the interest rate is 5%. The base is 100,000.
That is correct. I calculated that one. 5,000 divided 360 divided by 91 divided by 360 into 5,000 per year.
Into 5% into 100,000.
Yes.
Secondly, if we look at this one, it will be for 92 days.
Okay.
This one should be. This is 93 days.
If I capitalize the interest, the base amount will be changed, right?
89 days.
Sorry. If I capitalize the interest, so yeah, what I mean, I put the interest to the principal, so the calculation of interest will be different. The base amount of interest will be different from period to period, right?
The base amount will not be different. The base amount will be same. It is just that it will have compounding also. Because then you are adding the interest to the principal every quarter, and you will actually gain interest on the interest. You will have compounding impact, and the calculation will change. Because right now, if you see here, the calculation method is linear. It's linear interest calculation. Okay, but if you do compounding, it will change.
Okay.
So now we have created our first deal successfully. So now someone had a question on the workflow, right? So now what you can do, you can just click on settle here. So settle means that someone from the mid office actually is checking that whether all the information put in the transactions are right or not. And once they feel everything is correct, they just validate all the cash flow and everything. Okay. And then they actually save this. So here you will see that the contract status will change. So this deal is now settled. So now if you display the deal, you will see that the activity actually has changed from 1 to 2. and now it actually is free to the posting. Okay, so now you will see here that this shows released. I think someone had a question on the lock, right? Now you see that lock is released. Who asked that question?
Means after release, the document is in posted. The contract settlement
No,
document.
it is not posted. It means that it is actually, it can be posted, but it is not yet posted. It is
I had that question about the lock and was just away from the screen for a second. Okay, how did you go there? You were showing a screen where all the status of that. How did you go there?
yeah. So basically what I did, I just clicked on the settle button. Settle. Okay.
No. Even on this screen, how do you come? Even on this screen.
Oh, this one, just click on display here.
No, he's asking a T code, FTR underscore create, you created, right? Are there?
Oh,
FTR
okay.
underscore change.
Edit. So this is actually FTR underscore edit.
Oh, okay. Okay. So when you do the edit, then you come into this screen and then you can basically do a settlement.
Right.
Okay. And then probably at that point of time, that lock screen opened.
Correct. That lock actually opens and then it will become unlocked. That means it is free to do that. Okay, I think it's good that all of you also just try this out once, so that you can also do some practical. So what I would suggest is in the last 20 minutes, you just try this out in the system. I hope you guys have access to the server, right?
I've not read the
Settlement not mean there is a document, FI document, right?
Sorry?
Settlement not means there is an FI document.
No. It doesn't mean that.
Okay, what a step I can get a posted entries?
For accounting entry,
Yes.
TBB. Okay, let me message on the chat.
Okay, we will see it.
Yeah, we'll definitely see it.
Okay.
Yeah, so this is called TBB.
If we are not doing in SAP any transaction, how about you just continue with the flow, with the same transaction?
Yeah, the only thing is that I can continue, but the only problem is that I don't have all the configurations in place or not. And when I'm trying to change the configuration, actually, so before we show that, I wanted to also discuss on the accounting part. Okay, unless you understand the accounting, I don't think you to understand the overall flow. So, discuss the accounting part. So let's just go through this month-end process flow. In this one actually will help us understand what are the month-end processes that we have for treasury. Then we can also discuss on the accounting. And once you're comfortable with the accounting, then we can actually also try the TB1 part or the deal that we created. Okay, so let us go to the month-end process. Just give me a second. Yeah. So basically, as part of month-end processing, treasury transactions can be categorized into foreign currency and local currency transactions. So, okay, I think I was also about to show one foreign currency transaction for the deal, right? To show you the exchange rate part. Let me also show that to you. So whatever deal that you have created is in US dollar, and this is for US company. So that means this is a local currency. Depending on whether it's a foreign currency or local currency, the month-end process changes. Okay. So now let us focus on foreign currency investment. So we'll create similar investment, but this time we'll create for foreign currency. So here you have to keep the transaction currency. I'm giving it as euro here. So now you can see that the currency has changed from dollar to euro. Okay. So now if I go to the cash flow, let me check it.
In this example, check the capitalized interest.
Okay, then check that. So when you capitalize interest, it is taking the base as the same, but it is calculating for 730 days. And it is coming on the final repayment date.
Okay. The field change only the number of days.
Sorry?
The changes here is the number of days, not the base amount.
Right, correct.
Okay.
Yeah, okay. So let us again make it back to monthly. So now let's say you want to control the exchange rate, because currently, if you can see here, it is taking the rate from the OBZ rate. So whenever we see exchange rate marked here as current rate, that means it is taking the value from the OBZ rate. Whatever is the value on 1st of June, that same euro to dollar market rate will be taken from OBZ rate. Okay, you can also check that what you can do here. It's not maintained in last maintained is of 30th of November. Okay, yeah, it's the last rate for euro to USD. So since aim rate is an indirect rate, aim rate is an indirect rate, it should take from euro to USD. So
conceptually, system should pick up the 1.06, correct? 1 euro
Correct,
equal to
correct.
1.06 by default.
That's true, because if the last rate is maintained, we should pick up that one.
Yeah. So let's check on the instrument itself, what date they are picking, what rate they are picking. If you try to save, then I think then it will automatically.
So let's maintain something on that day.
But do you really need to maintain? Because even if you don't maintain, it should pick up the last, whatever is the last day maintain.
Yeah, that's true. That's true. But I want to actually maintain different dates for different dates. Like, for example, we have got 1st of April, 1st of June, 1st of October. So I have to maintain, let's say, 3 dates.
No, I get your point. This is your investment cash flow dates, fine, which is fine. What I'm saying is that if the system does not have a day exchange rate on that particular day, which is basically 1st April 2025, then whatever is the last day rate maintained, won't it pick up that rate? It should be picking up that rate.
Yeah, it will pick up. Yeah, I agree with you. It will pick up. But it will pick up that date for all the dates, right? It will pick up that.
I get your point. Okay, you want to show the difference.
Yeah.
Okay.
Right.
We will not get the future dates, right? So can you show what is the rate picked up here? Is it 1.06 or what?
Yeah. So basically here, if you just double click here, it will actually show you just current rate. It will actually not show you any value here.
I think because you have not sent, because I think this is happening because you have not saved it. Is it possible? If you save, you have not saved this deal.
Let's check that.
You just created it. You just have not saved it. Can that create an issue?
Let's check that.
Yeah.
No, it will still show the current rate. It will not show any value as such.
No, double click on the next line.
Or something, or is it going to happen? See, now we have just saved it. Okay. We have not actually done the transaction yet.
Yeah, that's when you do the transaction, that time it will pick up whatever it's maintained.
So let's post one entry for the first, deposit in, because you are doing a fixed term deposit. Let's do a posting for that fixed term deposit, because at that point of time, real transaction is happening. I believe at that point of time, it will convert the 100,000 euro to 106,000 USD. That's what my understanding is.
That's
actually do the transaction.
What will happen? Or let's say if in case you don't want to pick up the current rate, there's also another way. Let me show that to you.
Can you post this transaction? This is very normal. I can create the deal and middle office is checking that and posting will be done, let's say 5 days after. So you should pick up the exchange rate of the posting date.
It should, yeah, I agree with you. What I'm saying, in case you post a transaction, it will actually pick up this date, 1.06.
Yeah, can you post a transaction? Let's see whether it will pick up. It will show then once you post.
Yeah, you're right.
Okay. Let's post.
And for the transaction code is like TBV1, correct?
Right.
Conceptually, I believe in a real life scenario, Treasury will never like to pick up the default exchange rate from the system, because what happens is whenever these type of deals happen, they actually do it based on the real dollar. Let's say if they created an euro, they would not like to pick up from the system. They probably would like to pick up from what actually converted. Is my understanding correct? Generally, I'm talking about the business.
That is true. Actually, that is what I wanted to show you, how to change the deal, how to change the exchange in the deal. Because what happens is generally when you invest some money with the bank, then whatever you negotiate, that is slightly different than what you do in terms of transactions. Because when you do transactions, let's say when you're doing a payment of a vendor, at that time of the whatever is the current rate, let's say buy or sell rate, that is what the bank will pick up. But when you're doing the bank or taking a loan at that time, generally the bank will have a different negotiated rate. And in such case, generally doesn't pick up from the OBC rate. It has to, in such case, there's a way actually, I'll show you the way how to actually manipulate the deal, manipulate the exchange rate in the deal itself. And then whatever rate you provide in the deal, that is the rate actually should get picked up in the TBB or the posting system. Okay, let me also show you that. So if you just click here, so let's say right now we have this current rate, which is mentioned as a default. But let's say you have negotiated with the bank that for 100,000 euro, you will get, let's say, $120,000, right? So in such case, what you can do here, you can just right click here. You have to click on edit flow and you can put here a fixed amount. You can put 120,000.
What are you doing? So this screen is open.
Alright.
The screen of exchange rate, it was unchangeable. What the step you do so this is screen changeable, become changeable?
Yeah, so just to go to the cash flow, you can click on this flow type here. You can right click and you will get something like edit flow. Click on
Okay.
it and then you can actually put a fixed amount, or you can even give a fixed exchange rate, and you can give whatever is the right rate that you have mentioned to the bank. Let's say when you're investing 100,000 euro with a bank, at the time you can negotiate that I'm going to pay you 120,000, for example. So whatever rate you have negotiated, you can put that rate here. And when you do the accounting entry in TB1, automatically the same exchange rate will get picked up.
You check the fixed amount and you put exchange rate.
Yeah, it was actually current rate initiating. I changed to fixed amount and I've given the payment amount 120,000, which is equivalent to 100,000.
If I want to just put interest rate and not amount, I will choose exchange rate fixed.
You can click on exchange rate fixed or exchange rate. Let's say you want to put 1.3 here. So
Okay. Once I put here a fixed rate and save it, when I post the transaction, the system will drive it this rate, not in the OB08, right?
right, correct.
Can I change it again in the transaction after I put it here
After posting,
or before posting?
before posting you can change. After posting your card, there's a new card. In such case, you have to reverse the treasury transaction first. Then you can again change it. Otherwise, the system will not allow to change.
Okay.
But
Thank
before you can change it,
Okay.
I really don't know the configurations are in place or not. But we can try if this works. Otherwise, have to put the configurations in place first. Let's see.
How accounting department or the person who is responsible for posting accounting entry knows the deal is settled, so he can do post the deal. Is there is a list? Is there is a list to show what is pending settled deals or a notification? How it works?
Yeah, so we have a report. We'll actually do the treasury analytics and reports class. We'll also show you the different reports that we have, which shows what is the current status of the transaction, how to see the settled transactions, how to see the unsettled transaction, how to see the transactions by a particular product type or a business partner. We'll show you all the details when we cover the treasury analytics part.
Okay, thank you.
Sure.
This post all valuation areas means the foreign currency valuation areas or different valuation for treasuries.
Sorry, can I please repeat your question?
The post all valuation areas in the test run is there before below
Right, yeah.
test run.
Yeah.
This is for all foreign currency valuation is there, right? We will be maintaining foreign currency valuation. That is the valuation areas or different in treasury.
Basically, so what happens when you're doing the treasury design at the time? So when you're designing at the time, if you want this treasury postings to be done for different gaps, let's say, like in asset accounting, you have different areas, right? Similarly, in treasury also, you have different valuation areas. If you want to post for different valuation areas, then you click on post on valuation area. But if you just want to post for your own, that means let's say you're a company in India and you just want to post in India gap, then you just post operation only. In general, if you have multiple valuation areas, it is always recommended to use post all valuation area. In that way, whatever you're doing, it will post to all the valuation area, that means all the accounting gaps, and which are again linked to different ledgers. Like generally, we'll have the international gap, like IFRS will be linked to the 0L, then your local gap will be, let's say, 1L. So depending on the ledger and accounting principle that is configured, it should actually ideally post to different valuation. In that way, all your transactions will be part of the reporting for both international gap for head office as well as for your local company.
Why I may use different accounting principle in TRM?
No, not just in TRM. We use that for every part of finance, right? Let's say when you're posting AP, AR, asset, GL, every time you use different ledgers, right? It is not just treasury. You actually, ledger concept is applicable for all the finance entries. In treasury, we handle that through the valuation area. Let's say you post an expense entry, you post to 2-3 ledgers, right? Based on your accounting you want to post.
Okay. What is the organizational unit equal company code in TRM?
No, it's not like that. Like if I ask you what is the organization unit in FI, AP or AR, what will be your answer?
Sorry?
If I ask you what is the organization unit for accounts payable, how will you answer it?
Yeah, okay, I got it.
Like it's not, treasury is part of finance. So company code is also applies for finance.
The company code is highest organizational unit in TRM.
Yes, TRM is part of FI, right? So whatever applies for other support, say AP, AR, GL, same applies for treasury.
Okay, so the relationship between valuation area to company code one to many or one to one?
With what? Company code with what?
Sorry? To valuation area in TRM.
Oh, no. So valuation is for the ledgers. Like we have different ledgers, right? 0L, 1L, 2L. So those different ledgers are
Yes,
linked to valuation
yes.
ledgers. And it can actually cut across multiple company codes.
Okay.
Like for example, 0L can cut across multiple company codes, right? 1L can cut across multiple company codes. Like similarly, valuation area can also cut across multiple company codes.
Okay, great. Thank you.
Okay, I think we have got an issue for that TPP one. We need to
I think it because the number range, maybe the number range of the document, accounting document.
maybe we need to actually we'll first go to the configuration. We'll first do configuration of all the steps of a product. Then we'll try to do the TPP one. I think then it will start working. Because all the account determination and other steps should work fine. Then only we should be able to get post the entry. So I think configure, because this is a vanilla system, right? It may not have all the things in place. We need to do the configuration for what entire product type. And then once we do TPP one, it should work. But yeah, I mean, to answer your question, I think of the matter question. Whatever rate that Nokia 08 or whatever rate you forward the deal, once the accounting entry is posted, that same rate will get picked up in their local currency. Does it answer your question?
So I have one question. In OB08, we have updated both the direct and indirect code, right? So is it mandatory to update direct and indirect, or
No,
system can
no.
automatically calculate if we update the direct code?
Indirect is so generally embedded is indirect code, right? Indirect code is good enough for us to work. We don't need the direct. Actually, when I was doing the position by mistake, I have given USD to Euro, and then I suddenly remembered it has to be indirect code. Then I make it Euro to USD. If you just maintain Euro to USD in the indirect code, that is sufficient for the.
Okay, so in that case, so if we maintain for INR, then how we maintain that in system?
So for a market rate, embedded is indirect code for all the currency, not just Euro. So if you want to maintain, let's say 85 as a value for a certain, you should maintain from INR to USD as it.
Okay, as 85, I mean it should be 1 divided by then we have to maintain that rate, right?
Correct. Since USD is a very widely used currency, so we should maintain all the currencies to USD as an indirect code for embedded. But in some case, the exchange type configuration is direct. In that case, you can maintain the direct. But it's an indirect rate.
Okay. Generally, it is calculated only from either direct or indirect, right? Not for both, right?
Correct. It will be indirect only. I mean, in our standard settings, embedded is configured. But if you change the exchange to direct rate type, then you can maintain the direct rate type configuration. But since the default setting is for embedded type, that's why we are maintaining indirect rate.
Is it possible, like if we maintain USD to INR and for Euro, it's like Euro to USD? So how system will calculate those rates?
No, so if you are doing so let's say for US company code, and if you are investing in INR, in such case, you maintain INR to USD. But whatever, it depends on the foreign currency transaction that you're creating in the treasury. If a foreign currency transaction that you're creating is in INR, and then if you have INR to USD maintained in the M rate in the latest day, then that rate is picked up when the transactions will be posted.
Okay. Got it.
Are we going to walk us through configuration of money market or all things we have take in the upcoming session?
Yeah, absolutely. We'll go through the configurations of the transaction manager for the money market. So I have already shown some specific product type, flow type, but we'll cover in details. We'll create a new product. We'll product type, transaction type, grid type, flow type. Then we'll do all the GL configuration, condition type. Then we'll create a fresh deal for the new product type.
Okay, I still have a problem with update type, so I hope in the next session will be done.
Yeah. I think it's also important that you guys practice. So once we configure a new product in our training session, my suggestion is to also try that. Maybe all of you can create a separate product type from your side and try to create a new deal that will actually help you a lot. And
Okay.
confidence too. Okay, thank you everyone. That
Yeah, thanks.